Today we're reviewing shocking claims from Kohl. He claims the rise of AI is causing tiny stocks to soar up to 1,200%. In this video, I reveal all stocks being pitched so you don't have to buy Keith's newsletter. No paid or proprietary info is given away here, and it's all guesswork based on clues in a publicly available sales presentation. There's lots of stocks to uncover here, so we're going to get straight into things. All stocks have to do with companies that will explode under Trump and involve different resources. Here's the clues for the first stock. Stock number 1, the gold antimony powerhouse. The only known U.S. source of antimony, a metal critical for everything from AI processors to missile guidance systems. On track to become the number 4 highest grade gold producer in America. Backed by $75 million in Department of Defense contracts. Secured a $1.8 billion financing commitment from the Export-Import Bank. Holds 100% ownership of its project. No royalty carve-outs. Still trades for just $15, but not for long. This company is now a central player in America's defense-aligned mineral supply chain, and could become the antimony equivalent of MP Materials. The stock being pitched here is Perpetua Resources, ticker PPTA. Here's everything to know about this stock. Perpetua Resources is advancing the Stibnite Gold Project in Idaho, with a mission that goes beyond traditional mining. The company aims to restore an abandoned mine site while producing domestic gold and antimony, positioning itself to become the only U.S. producer of mined antimony. Through this effort, Perpetua seeks to strengthen national security, support the transition to green energy, and provide critical resources for defense industries. In January 2025, the U.S. Forest Service issued its final record of decision for the Stibnite Gold Project after an 8-year review, marking a major milestone for Perpetua Resources. Just a few months later, in April 2025, the White House designated the project as a priority project, ensuring faster interagency coordination. Looking ahead, the company expects to secure its Clean Water Act permit in the second quarter of 2025. With these regulatory steps advancing, Perpetua has already completed basic engineering and finalized its financial modeling, positioning the project for the next stage of development. Perpetua Resources' Stibnite Gold Project holds significant reserves, including millions of ounces of gold and hundreds of millions of pounds of antimony. The project is designed with a mine life of more than 15 years, providing long-term production potential for both critical resources. Perpetua Resources has secured substantial financial and strategic backing to advance the Stibnite Gold Project. The company has raised a total of $474 million in equity, including a $100 million private placement from Paulson & Company, which resulted in John Paulson holding roughly 31% ownership, a strong signal of insider confidence. In addition, the U.S. Export-Import Bank has issued a letter of interest for up to $1.8 billion in loan support, while the Department of Defense has provided $60 million through DPA Title III awards. Together, this combination of equity investment, government funding, and potential federal loan support highlights the significant confidence in and importance of the project. Perpetua Resources emphasizes environmental restoration as a core part of its mission, with plans for site cleanup, salmon habitat restoration, and low-carbon operations powered by Idaho's clean energy grid. The project is also expected to deliver significant economic benefits, including the creation of more than 550 direct jobs in Idaho and educational partnerships to support workforce development. However, risks remain. The Nez Perce tribe continues to oppose the project due to environmental concerns, commodity price fluctuations could affect profitability, and some final permits are still pending. Even so, with most major approvals secured, the project's economics remain strong and well-positioned for long-term success. I'm going to reveal the rest of the stocks in 15 seconds, but before I do that, I want to remind you to sign up for my free report on the top 10 stocks to buy and hold forever. This report comes with no gimmicks, no get-rich-quick nonsense. Just solid long-term investments you can actually feel confident owning. Click the link in the description to get your copy right now. Here's the clues for the second stock. Stock number 2, the Ultra Mega Lithium discovery located in Oregon, sitting atop one of the largest lithium deposits ever discovered. Contains up to 120 megatons of lithium, nearly 10 times the size of Bolivia's reserves. Forecast to produce 1.8 million tons of battery-grade lithium carbonate over 40 years. A massive piece of this ultra deposit is controlled by a little-known company trading for just 26 cents, already working with state and federal officials on permitting and production. This could be America's most important lithium asset, and the most valuable stock in the country's clean energy supply chain revival. This is Jindalee Lithium Limited, and is available over the counter with the ticker JNDAF. Here's what to know about this stock. Jindalee Lithium is an Australian exploration company with a strong focus on advancing critical mineral projects in the United States. Listed on the ASX since 2002, the company maintains a tight capital structure with only about 79 million shares on issue, and its leadership demonstrates significant commitment with approximately 24% of the stock held by the board. The McDermott Project, located along the Oregon-Nevada border, is emerging as one of America's largest lithium resources, with an estimated 3 billion tons grading 1,340 parts per million lithium, translating to 21.5 million tons of lithium carbonate equivalent. This flat-lying claystone deposit is well suited to large-scale, cost-effective development. Progress has already been made, with battery-grade lithium carbonate successfully produced, engineering support provided by Fluor, and environmental baseline studies completed. Economic indicators from the pre-feasibility study are strong, with a post-tax NPV of 3.23 billion US dollars, an internal rate of return of 17.9%, and projected annual production of 47,500 tons of lithium carbonate in the first decade. The project also boasts a payback period of less than 5 years, underscoring its potential as a cornerstone of America's lithium supply chain. Jindalee Lithium is building strategic momentum through strong policy alignment and partnerships that enhance the McDermott project's potential. The deposit has been designated a Fast 41 transparency project, placing it on a federal fast-track permitting pathway and making it eligible for Defense Production Act funding. To strengthen its technical edge, Jindalee has entered into a CRADA with Ames National Laboratory, supported by the DOE's Critical Materials Innovation Hub, to advance lithium extraction research. On the corporate front, the company has engaged experienced advisory teams in Korea and North America to accelerate funding and partnership opportunities following its pre-feasibility study. This positioning comes as other regional lithium projects continue to secure significant DOE and private sector funding, underscoring the favorable environment for large-scale U.S. lithium development. Jindalee Lithium has recently undergone a leadership transition, with Ian Roger appointed as managing director in June 2024, while longtime leader Lindsay Dudfield remains involved as a technical advisor. The company maintains a lean market position with an estimated market capitalization of around 19 million Australian dollars, a debt-free balance sheet, and shares trading at approximately Australian dollars 0.40 by mid-2025. Financially, however, the trend reflects the challenges of early-stage development, with operating losses widening to about 4.7 million Australian dollars in 2024, as project advancement requires increased spending. Jindalee Lithium presents an investment case defined by both compelling upside and notable risks. On the positive side, the company controls one of the largest lithium resources in the United States, supported by strong project economics, favorable policy momentum, and successful technical validation of its processing flowsheet. At the same time, key challenges remain, including the early development stage of the McDermott project, its significant capital requirements of roughly 3.02 billion US dollars, limited current cash reserves, and the inherent volatility of lithium markets. For investors, the path forward will hinge on critical catalysts such as securing strategic partnerships, initiating a definitive feasibility study, and achieving key regulatory approvals. Overall, the thesis rests on balancing the project's strategic potential against the near-term funding and execution hurdles. Here's the clues for the third stock. Stock number 3, the EV supply chain breakthrough, the only direct lithium extraction project on the federal fast-track list. Backed by the Department of Energy and recognized under Executive Order 14,241, focused on next-gen lithium refining technology to break America's dependence on China, vital to powering EVs, AI server backups, and defense batteries. Still trades for just $2 a share. This is one of the most advanced domestic lithium processors in the country, with institutional validation to match. Here's what to know about this stock. Standard Lithium is a near-commercial lithium developer listed on the TSXV, NYSE American, and Frankfurt exchanges, focused on advancing sustainable lithium brine projects in the United States. The company is pioneering the use of innovative direct lithium extraction technology, which is designed to be more efficient and environmentally friendly than traditional methods, positioning it as a potential leader in the push for U.S. lithium independence. Standard Lithium's core projects provide a strong strategic foundation for its growth. The Southwest Arkansas project is a greenfield development with an estimated 1.2 million tons of lithium carbonate equivalent resources, averaging a brine grade of 481 milligrams per liter, and backed by a partnership with Equinor. Phase 1A, located at the Lanxess South Plant, is a brownfield direct lithium extraction operation that benefits from existing brine supply and established infrastructure, offering a faster path to potential commercialization. Meanwhile, the East Texas project is in the early stages of exploration, but has shown encouraging results with high lithium grades in initial drilling, highlighting future growth potential. Standard Lithium is positioning itself as an industry leader in direct lithium extraction technology. The company operates the only commercial-scale DLE demonstration facility in North America, showcasing its ability to move beyond lab testing and into real-world application. This process is more efficient than traditional evaporation methods and offers a more environmentally sustainable approach to lithium production. In addition, Standard Lithium has developed a novel low-temperature process that converts lithium hydroxide into lithium sulfide, a material with strong potential for solid-state battery applications. With U.S. strategic interest in DLE growing as part of broader efforts to achieve energy independence and secure critical mineral supply chains, the company's technological edge has become a key differentiator. As of the second quarter of 2025, Standard Lithium reported a cash position of $33.8 million and working capital of $30.6 million, with no outstanding debt obligations, giving the company financial flexibility as it advances its projects. On the market side, analysts remain broadly optimistic. The consensus rating from 5 analysts is a strong buy, with an average price target of $4.92, suggesting about 25% upside from current levels. Raymond James has also maintained an outperform rating, reflecting confidence in the company's strategic trajectory. For investors evaluating Standard Lithium, the opportunity lies in its alignment with the U.S. push to reduce dependence on Chinese lithium supply and meet the country's growing domestic demand, which is projected to reach roughly 5.8 million tons by 2050. The company's technological edge, particularly in direct lithium extraction, has already begun attracting strategic partnerships and could position it as a key player in the evolving U.S. supply chain. However, risks remain significant. Standard Lithium is still pre-revenue and carries a monthly cash burn of around $2 to $2.5 million, which could necessitate further financing and potential shareholder dilution before achieving profitability. Additionally, the rise of emerging technologies such as sodium-ion batteries and competition from larger, well-capitalized global players present challenges to its long-term outlook. As such, the stock is best suited for long-horizon investors who are aligned with the broader vision of U.S. lithium independence and are willing to tolerate the associated risks. Before you go, don't forget to grab my free report, the 10 stocks I believe you can buy today and hold forever. It's packed with solid long-term picks you won't hear hyped up anywhere else. Just click the link in the description, enter your email, and I'll send it straight to you.